Hello, everyone, and welcome to the webinar. Today, we're going to be talking about the Bbb Standards for Charity Accountability, how meeting them can benefit your nonprofit. Today's presenters are myself, Mara McGinnis. I am the Director of the Charity Accountability Program at the Foundation of the Better Business Bureau, Metro New York, and I am joined by my colleague, Chris Chandler, who is the Charity Accountability Program Associate. So you'll be hearing from both of us today about our Bbb Charity Standards. Before we get into the standards, I do want to spend a little bit of time talking about the Bbb, what we do, why we do it. So essentially, the Bbb helps people find businesses and charities that they can trust. Our vision is an ethical marketplace where buyers and sellers can trust each other, and that includes setting standards for marketplace trust, working towards a diverse, inclusive, and equitable marketplace, and educating consumers and businesses. Specifically, we're going to be talking about the Metro New York Bbb Foundation mission. And that is our mission there is to be a leader in advancing marketplace trust and upholding and recognizing ethical business and charity standards and practices in New York. So that includes charity accountability reports, which is primarily the reason why we're here today, is to talk about those charity reports and to talk about those charity standards. We also, in addition, do educational programs for charity and business leaders, as well as consumers. And these educational programs look to enhance performance and impact, to meet high standards, and to detect and prevent frauds. In total, there are 64 programs in the Bbb system, reporting on about 11,000 international, national, and regional charities. So that includes the National Bbb Wise Giving Alliance. So the Wise Giving Alliance is the organization that's going to look at national and international organizations. Specifically, we're looking at the Metro New York Bbb Foundation today, and we might be joined by some colleagues who are joining us from upstate New York. So I'm going to be talking about New York State in general. Specifically to our program here in Metro New York, we do work with the 5 boroughs, Long Island, and Mid-Hudson region. We have about 765 reports on those charities. So why do we do what we do, right? Businesses and consumers actually asked for it all the way back in the 1920s. That's when we started to begin to develop who we are today. Really where we began to really kickstart the program as we know it today is 2001, when we were working with the Wise Giving Alliance and really creating the standards as they are today. The standards themselves have been 20 standards, but the way that we implement them has changed a bit over time. So today I'm going to be talking about the standards as we know them today. So our Bbb standards for charity accountability, there are 20 of them. And just some quick housekeeping, we will be sending a copy of these slides after this webinar, so there's no reason to get your pen and paper out and start writing down each standard. I'm happy to share this slide with you after the fact. So we're going to be talking today about the governance and oversight standards, finance standards, measuring effectiveness, as well as fundraising and informational materials and communications. 3 recommended practices outside of our standards are diversity and pluralism, adherence to the law, and prioritizing open and ethical behavior. So the guiding concepts for the Bbb standards, this is a voluntary disclosure. We ourselves are also a nonprofit. So when charities work with us, it's because they want to work with us. It is completely on a voluntary basis. The accuracy of reporting and solicitations is really the bread and butter of the Bbb. So if you receive a solicitation from a charity, we want to make sure that donors are not in any way misled and that there is clarity about use of those donations. Some other guiding concepts of Bbb standards are duties of care, loyalty, and obedience. That includes active oversight of financials, which we will get to in some of these standards, and focusing on achieving your nonprofit mission. So something that might be different or something that you might not know about Bbb Charity Reports is that we don't have a ratings-based system. We evaluate off of key practices, so that's that standards that we're going to be talking about. You're not going to be an A-rated charity or an F-rated charity. You might meet all 20 standards, or you might miss 1, or you might miss 2, but you will not be A through F. There's no stars, it's standards based. We use the generally accepted accounting principles, or GAAP, for consistency. So if you're an organization that is required to file an audit or a CPA review, we're going to be looking at that exclusively. The IRS Form 990 is not sufficient enough to meet these standards, except for very special circumstances. And we understand that accountability is more than financials. So we're going to be talking about our holistic approach of looking at a charity. So what is the benefit of a charity report? To donors, we say that it's a free and quick way to check if charities meet high standards. So the BBB is a widely recognized, valued charity trust mark. So donors have the ability to click on that seal if it's on a charity's website. That brings them right to a charity report, and they're able to look at that report. And I'll show you an example quick in the next few slides of what that looks like. It's a quick, succinct way to see if a charity meets our 20 standards. What is the benefit to charities? So there might be different benefits depending on your organization. So we believe that our standards are helpful key practices. And again, because it's not just financials, this is an opportunity for your communications team to maybe talk with your financial team, to maybe talk with your board, and make sure that everyone's on the same page as it goes to these 20 standards. Each report is good for 2 years. So this would be a 2-year check-in to see if you are still meeting our 20 standards. The BBB accreditation, if you meet all 20 standards, there is no fee for that. There is no fee to develop a charity report. If you would just like to pursue this charity report so that donors can look on bbb.org to see if your charity meets all 20 standards, that is a completely free option. If you would like to license the BBB seal to use it as a fundraising tool, say on your website, like I just mentioned, that would be an optional licensing fee based on your public revenue. That's a sliding scale. And if you have more specific questions about that sliding scale, I'm happy to talk offline about it so I can customize it to your organization. So if you've never seen a BBB charity report, this is what one looks like. It's listed right here, right up on your screen. You'll see that our standards for charity accountability are all listed there next to green check marks that indicate that these standards have been met. There's also a part of the report where you can put your mission, your programs, your governance and staff, as well as some key fundraising information, so example methods that are used in your fundraising approaches, and confirming your tax status. There's some basic financial information as well, which you'll see here, which includes your total revenue, your program, fundraising, administrative expenses, your beginning net assets, and your ending net assets. That again is taken directly from the audit. So some general areas of focus when we're working with organizations, this includes but is not limited to, but typically when we are looking to evaluate an organization, this is what we're looking for. We're looking exclusively for organizations that are publicly soliciting donations, which include government grants. So if you are asking the public for funds, we would pursue a charity report. If you're a nonprofit that works exclusively with government contracts and you're not specifically asking anyone for funds, that might not be the best fit for our program. Organizations in the news or otherwise of interest to the public, eligible organizations requesting BBB charity reports, as well as focusing on larger charities collecting greater share of dollars in business for 3+ years, but we also may evaluate smaller organizations. So if you don't think that you have a great share of dollars collected yet, I'm happy to speak offline about that. We of course have organizations that don't have a greater share of those funds. So if you would like more information about if you qualify for a BBB charity report, I would be happy to talk offline about that. Okay, so before we jump into the standards, again, just wanted to mention that this deck will be sent after the webinar. And if you have any questions, feel free to begin to type them in. As Chris is going over his standards, I'm going to be looking over those questions and I will be answering them in real time. So feel free to begin asking questions whenever you'd like. So with standard 1 through 5, I'm going to begin and we're going to start talking about governance. So standard 1 is probably the longest standard we have because it includes a whole bunch from your board and your staff. So the board of directors provides an adequate oversight of charities' operations. That's the essence of what this standard is. So within that, we're looking to make sure that the board is approving all things financials so that they're able to see your budget, your audited financial statements, your 990, the management letter that comes for your audit. All of those things should be going through your board, including having a voting board member who oversees those financials. So that could be a treasurer, that could be the head of an audit committee, that could be any independent board member whose role on the board is to oversee those financials. It's very different than something like a CFO or a controller from your organization. This is an independent board member. We're also looking for board to monitor a conflict of interest policy and anything that has to do with New York State law, like whistleblower policy, related party transactions. These things all pertain also to New York State law. So if you have any questions about what you might not have as it pertains to whistleblower policies or conflict of interests, my suggestion would be to check out New York State law first. We're also looking to make sure that the CEO performance is being reviewed at least once every 2 years by the board. We also wish to call your attention to the updated disclosure requirement for solicitation of charitable contributions. So this is something that did change in 2019 with the Charities Bureau. So if you're unfamiliar with this from a fundraising element, I would suggest looking into this. And I did skip this slide. This is also related to the standard one, board of directors. We also include a board oversight element to the standard that requires that the organization complies with applicable government charity regulations. So again, doing that due diligence and making sure that you're up to date with the Charities Bureau. Standard 2 is a bit easier. A board of directors with a minimum of 5 voting members. New York State requires 3. We require 5. So standard 3 is board meetings, and this is actually the most missed standard of 2020. So I did want to spend a little bit of extra time to discuss this, and if there's any confusion or necessary clarification, please feel free to leave me a question and I'm happy to answer. So 2020 was obviously a very different year as it goes for board meetings. You might have discovered Zoom for the first time or Google Hangout for the first time with board members who might not have ever used it. But when it comes to this standard, if you're able to hear and see each other at the same time, so Zoom cameras on, that actually includes face-to-face as it pertains to this standard. So specifically what we're looking for is a minimum of 3 evenly spaced full board meetings per year with a majority in attendance. 3 with the highest attendance if there are more than 3 board meetings. So face-to-face for at least 2 meetings, 1 phone conference is allowed of 3 board meetings. So again, that face-to-face, Zoom, Teams, GoToWebinar, all of these different modes of communication that we may have just discovered in 2020 absolutely count as face-to-face if those cameras are on as you're making those voting decisions. So if you have any questions about your board meetings, feel free to ask them. I'm happy to answer them. Standard 4, this is about board compensation. So we're looking to make sure that not more than 1 or 10%, whichever is greater, directly or indirectly compensated persons may serve as voting members of the board. So there are different components of this, including that compensated person should not be the board chair or the board treasurer. The chair may not also perform the same role as the CEO or the COO, whether or not he or she is compensated. So the reason why we have this standard is we always want to keep that arm's length distance between roles. So there is no monetary gain from being a board member within reason. So if you have not more than 1 or 10%, you would meet this standard. If you have any questions about that might be very specific to your organization, feel free to let me know. I know that some smaller organizations might have the CEO and the chair perform the same role. We would strongly recommend that the chair and the CEO are 2 different people, even if those people are uncompensated. Again, it's just that arm's length. So the board chair, in addition, may not also serve as the treasurer role. Let's say, for example, that your treasurer is no longer able to commit themselves to doing the same role as they previously did, we would ask that whoever steps up is not also the board chair. We would look for a separate independent board member to take over that treasurer role. Compensated or uncompensated senior executives may not serve as the chair of the same organization's board if they supervise paid or unpaid staff members or perform the same functions. So if you have any questions about this, there are different components to this standard. I'm happy to help. And to wrap this up, standard 5 is related to related party transactions. So this is making sure that there are no transactions in which any board or staff member have material conflicting interests with the charity resulting from any relationship or business affiliation. So if your board member works for a company, let's say they work for a paper company, and they want to provide your fundraising gala invitations at a lesser price than they typically would for the public, just some factors to be considered is whether that interested party participates in the board vote. If you're looking at what the market might have for something similar to that, making sure that you're looking at those competitive bids, the size and duration of the transaction, and whether or not the transaction is one-time or ongoing. If you have any questions about this, I'm happy to answer, but there is a New York State law regarding conflict of interest and related party transactions. So if you do have a board member who might be an interested party in providing some information to your board, I would suggest looking at New York State law in addition to that. So with that, I'm going to pass this off to my colleague, Chris Chandler. If you have any questions, I'm going to be monitoring them in the meantime.
All right, thanks, Mara. So standards 6 and 7 has to do with measuring effectiveness, and these were actually tied for the second most missed standards of 2020. Standard 6 regards having a board policy of assessing no less than every 2 years your organization's performance and effectiveness, and determining future actions required to achieve its mission. The easiest way of explaining this is that your organization, every 2 years, has a conversation asking, where were we, where are we going now, and how are we going to achieve this? If you have a policy indicating that you're committed to this practice, you would meet standard 6. So why do we ask for this? We want to see that organizations have clearly identifiable and measurable goals and objectives, and a process to evaluate the success or impact of your programs to fulfill the mission. Now, to clarify, we don't judge the results of this assessment, and we aren't here to say that if what you're doing is right or wrong. But ultimately, we simply want to see that your organization is looking at itself honestly in a transparent way to ask what is working, what is not, and how you can improve that going forward. With that, standard 7 asks that you have a written report of this assessment. So let's say you have this assessment and maybe you put together a PDF or a document outlining notes, what was discussed, minutes from the discussion, and this would count as your written report. This standard also asks that a governing body reviews and approves the written report outlining the results of the assessment against mission goals. And again, a strategic plan performance evaluation may also qualify if they meet these criteria. If you don't know if you meet standards 6 and 7 and don't have something that might qualify as a measuring effectiveness policy, this on the screen are 5 questions that you can ask yourself in order to start creating a policy of measuring that effectiveness. And if you have any questions about starting a measuring effectiveness policy, we at the BBB of Metro New York have a template of what this could look like, and we are happy to provide that to you after this webinar upon request. So next up, we have standards 8 through 14, which has to do with finances. Now to start off, we understand that accountability is more than just finances, but standards 8, 9, and 10 are the only standards that set target spending ratios. Now a little bit about the overhead myth before we get started. And this is both directed towards the donors of America and the nonprofits of America. Being honest about your overhead costs is not a bad thing. It's actually good to be transparent in outlining where your money is going so that your donors know what their donations can reach and how they are ultimately helping out. So we put this together with GuideStar and Charity Navigator to describe what the overhead myth looks like. Other factors outside of overhead costs that matter are, of course, transparency, governance, leadership, and results. These are all things that donors are looking for when deciding whether or not to donate. And why is all this important? About 94% of organizations that are evaluated do meet these standard ratios, and only about 6% or fewer do not. So we hope that these ratios are reasonable despite the size of your organization. And with that, we will move on to Standard 8, which has to do with program expenses being 65% or more. So we look at your total expenses compared to your total program expenses, and we want to make sure that it is at least 65%. If you're not quite sure what your program expense looks like at your organization, definitely speak with your auditing team, accounting team, and discuss what it might look like for you. This might look different for many different organizations, depending on what types of services you provide or what field you may fall under, depending on whether you work with annual services or are more policy-driven or have an educational initiative. So definitely understanding what your specific program expenses look like is extremely beneficial when seeing how your organization might meet this standard. Standard 9, 35% or less of your related contributions being spent on fundraising. So when we are looking at your total fundraising expenses as compared to your total intake of related contributions, it should be at most 35%. An easy way to look at it is that you're spending at most 35 cents of your raised related contribution revenue in order to, in turn, raise $1. You want to make sure that that 35 cents is being used as reasonably as possible. So what counts as a related contribution? There's many ways of looking at it, but pretty much what we're saying is that we are looking at revenue earned, including but not limited to these different streams of fundraising revenue that are listed on your screen. So this includes donations from individuals, private corporate funders, special event revenues, etc. And because these are more public sources of solicitations, we will call them a related contribution. So again, for this standard, we are looking at fundraising expenses as compared to money earned from your related contributions. And now with this, we go back to Mara for Standard 10.
Thanks, Chris. So Standard 10 actually ties for the second most missed standard of 2020. So I want to spend a little bit of time talking about accumulation of funds. So we're looking for your unrestricted net assets available for use to be, should not be over 3 times your last year's expenses or 3 times the size of your current year's budget. And then when we're talking about unrestricted net assets, we're not talking about fixed assets like land, building, and equipment. We're specifically talking about that unrestricted asset. So we want to avoid that accumulating funds that could be used for current program activities. And if you're thinking to yourself that you might be in a very lucky position to have 3 times your past year's expenses in your unrestricted net assets, there might be a reason for an organization to have 3 times their past year's expenses in unrestricted net assets. So if you are over this limit, you can meet the standard by complying with disclosure requirements in direct mail, marketing appeals, and websites. And the reason why we have this standard, and I think I'll probably be saying it a lot, is so much of what we do is about transparency. So unless otherwise informed, donors do expect that their contributions will be spent on current programs. This has been confirmed by public survey research. So full disclosure only ensures that donors will not be misled when they do give. If you have any questions about your unrestricted net assets, it looks different for some audits. You might be more familiar with something like not designated, undesignated, those types of funds. So if you have any questions about this specifically, I'm happy to answer them, but limiting or disclosing, we're talking about those unrestricted funds. So I'm going to turn this back over to Chris for availability.
Yes, so Standard 11 has to do with availability, making available to all on request complete annual financial statements prepared in accordance with GAAP principles. So the national standard indicates that if your income is over $1 million per year, that a full CPA audit is required. If your income is between $250,000 and $1 million, that requires a CPA review. And if it is under $250,000, that requires an internally prepared statement. There can be a lot of very specifics and fine prints with this, so we would suggest going to the New York State website to learn more. It does change, not often, but it does. So making sure you file the correct financial statement is part of our Standard 11. For Standard 12, we are looking within your financial statements for a breakdown of expenses broken down accordingly to program, fundraising, and administration costs. And for clarification, fundraising could be development and admin could be management and general. You would probably hear us refer to program, fundraising, and administration costs a lot, especially moving forward. And the reason is because we want to make sure that it looks similar to what is in front of you right now. For organizations that may have a lot of programming involved, it is super important to break down functionally as well as the natural classifications of how and what is being attributed to what program, to what fundraising costs, and to what admin costs, which could be anything like travel costs, salary, rent, etc. And we want to make sure that all of those things are being allocated correctly on your financial statements. Some people think that fundraising costs may be too small. However, we promote being very transparent about your fundraising because that is the best way to meet the 20 standards, no matter how large or small those expenses might be. So why is it important that we ask for this functional expense breakdown? We believe that it is not only a critical management tool for your staff and board, but it also tells your story to your donors and stakeholders. How are the donations being used? Where can they expect their funds to be allocated to, etc. GAAP requires now that health and welfare organizations break this down. Your IRS Form 990 includes this. So this is definitely a reasonable ask to be submitted for your organization and is greatly useful across the board. So next up, we have Standard 13, which has to do with accurately reporting your organization's expenses, including joint allocations. When we look at an audit or CPA review, and they are claiming that there are zero fundraising expenses, we want to make sure that we are getting down to why that might be. A charity may spend very small amounts on fundraising, like for example, $25, which is something you might not consider as fundraising because it's such a small amount, but it definitely is. So making sure that you're on the same page with your development team and auditing team in order to make sure you know what exactly is being counted as fundraising is really key to meeting this standard. Next up, we have Standard 14, and this wraps up the financial standards, and we are going to discuss the budget. So this is a completely internally prepared document that must be board approved and must contain the projected program, fundraising, and administration expenses broken down just as in Standard 12. So the reason why we asked the budget to be broken down similarly to the audit is because we want to make sure that if you're going to be doing it for the audit, why not start the year off that way? Why not start the year looking at those expenses and knowing reasonably where your anticipated expenses are going to be allocated? So when it comes time to that audit, you might not be surprised with where you're at. And at the end of the day, it's just a very good habit to get into, and it's just a great tool for your staff and board. An example of a budget that would not pass Bbb standards is the budget that appears on your screen now. This shows the natural classifications that we mentioned beforehand. This would not pass, however, because I can't verify where these are going functionally. Now, the second one would meet our standards. I can see program services as well as projected expenses for fundraising and administration. Some organizations don't break it down into fundraising and admin and just show supporting services, but we would ask that those two are broken down individually. If you don't have a budget, this on the screen right here is a great tool to use in order to create one if you're interested in doing that now at this point. And now we go back to Mara to begin the next set of standards, which are fundraising standards.
Perfect. So with the fundraising standards, these are going to pretty much wrap up what we're doing with our 20 standards. And when we are looking at fundraising standards, I said earlier, really the bread and butter of the BBB is making sure that donors and consumers are not misled in whole or in any part. So when we're looking at Standard 15, we're looking specifically with those solicitations. So when you get a solicitation, whether that's an e-blast, that could look like a phone call, that could look like a direct mail appeal, what are you saying to your donor? Is this something that you can verify and substantiate? Are your stories and photos up to date? Are these key facts relevant to the donation? Are they disclosed? And your financial and success statistics, are they up to date? If we look at your audited financial statements, will that program ratio match up? So what you are giving to your donor, we look for an example of each solicitation and we verify that internally. So, when we're looking at creating a solicitation, explain clearly how your funds will be used. Be able to substantiate the accuracy of your claims. If you are saying things like 100% of your gift will go directly to Ruby, this cat at this animal shelter, is it specifically to Ruby or is it like cats like Ruby? So when you are making those claims, just being as specific as you can and able to substantiate your claims. Back to Chris to talk about the annual report.
Okay, so standard 16 has to do with the annual report. We ask that an annual report be available to all upon request and that it includes your mission statement, past year's program results, a roster of your officers and board members, and your basic financial information. And included in that is total income, expenses broken down into program, admin, and fundraising, as well as your ending net assets. So these are all components that we are looking for within an annual report. Of course, especially during this time, we're probably not seeing super glossy and expensive publications by mail. So definitely a PDF of your report as seen on your website is something that you can for sure send us. Maybe you e-blast it to your mailing list, maybe you send it directly to donors who ask, but we just ask to make sure that if a donor requests an annual report, that you have one document that's available to send to them. So just as an example, let's say that you have all the required components of an annual report, but it's spread out amongst your website. Your audit on one page, your board on another. Unfortunately, we as a donor can't pull that information together to create an annual report. But if all that required information is together on one PDF or one page of your website, then we would consider that to be an annual report. And again, a digital version is acceptable as long as a hard copy can be made available to those who might request it. And just as an added note, your IRS 990 can also qualify as your annual report as long as your program service accomplishments are also detailed within your 990 as much as they would be on a typical annual report. However, we still encourage the creation of an annual report because from a donor's perspective, it is much cleaner, succinct, and easier to follow than a typical 990 form, which they might not be accustomed to looking at. And with that, we go back tomorrow with the rest of the standards.
Great. So standard 17 has to do with website disclosures. So this applies if your organization solicits donations by any means on your website. And this includes requesting mailed contributions, asking for contributions electronically, or asking donors to call in or text a contribution. So if you have a website, odds are you probably are soliciting for funds on that site. So when we are looking at organizations that do solicit, we're looking to ensure that all the information from that annual report that Chris just talked about, that's also on your website. Bonus points, if you just upload your annual report, that means that if your annual report meets this standards for 16 and you publish it on your website, that meets standard 17. So doing these two things in tandem is really helpful, including your mailing address and electronic access to your most recent 990 with an appropriate labeled link. A lot of organizations put up their GuideStar link that when you click on it, brings them to the profile. You can easily access the Form 990. Make it even clearer if you can and say that this is specifically going to lead you to the Form 990. That again is that transparency that we're looking for. Standard 18 has to do with your privacy policy. So addressing the privacy concerns of your donors, specifically by providing access to a clear and accessible privacy policy link on any website that includes what information is being collected and how will it be used, how to contact the charity to review or correct information, how to tell charity not to share personal information outside of the organization, and what security measures are in place to protect the information that they did submit to you. So kind of just covering your bases, your who, what, where, when, why of the data that's being collected. That is what this privacy policy standard is all about. If you are an organization that does share information with third parties, maybe similar charities, similar missions, just providing the opportunity once a year to opt out. So donors aren't bombarded with different solicitations and appeals. A very common question that I do get from consumers is, how do I unsubscribe? Make it easy for your donors or your online web visitors if they would like to. So if you have any questions about your cyber and data security resources, here are some resources that we've put together for you. Standard 19 has to do with cause-related marketing. And cause-related marketing is when a for-profit business and a nonprofit organization work together for a mutual benefit. So this could be like if you walk into a coffee shop, let's say Starbucks, and you buy a small coffee, 25 cents of that coffee is going to be given to a specific organization. There are different, there's different things that apply to that specific promotion. So when we're looking at this, we're looking to make sure that that promotion includes the actual or anticipated portion of purchase price to benefit the charity, the duration of the campaign, if it's time limited, let's say it's until it's for 2 months, or if that has an expiration of a dollar amount. So until we raise 250,000, for example. So full disclosure, right timing. An example that would meet would be that 5 cents would go to ABC Charity for every bottle of juice sold April 2021 up to a maximum of 500,000. So that really gives a lot of specifics, and there is different Attorney General guidance around this. So if you do participate in cause-related marketing, I really can't recommend enough looking to see what the Charities Bureau asks of you. So Charity Standard 20 is complaints, and that wraps it up for us as it goes to our standards. So we're looking for charities to respond promptly to complaints brought by a local BBB or the Wise Giving Alliance. So this would be anything that's related to a marketplace transaction. So let's say, for example, that someone gives you $20 and in return they're expecting a mug or a t-shirt. Making sure that you do good on that and to provide that good to that donor. If we do get a complaint saying that they did not get that t-shirt or that mug and that marketplace transaction isn't fulfilled, we're going to ask you as the charity to try to find that mutual reconciliation between that. So we'll help mediate that as a third party. And that wraps it up for our 20 standards. Again, if you have any questions, feel free to ask them below. But as we go on, I just want to just wrap this up by saying that there are top 10 Missed Bbb Standards in 2020. The first one, again, was those board meetings. So if you have any questions at all about what a board meeting attendance might look like as in the time of COVID, as we do so much virtually, please feel free to ask. And if you want a copy of that effectiveness policy, if you don't have one, or you might be thinking that your strategic plan or your bylaw might work, that would be great to shoot me an email and to ask me that. If you'd like to look at the standards on your own time, this also includes an implementation guide. You'll be getting this link. For the disclosure process, if you are an organization that might be renewing your report, so let's say, for example, you have one online right now and it's expiring soon, feel free to be in touch with myself. I have my email at the end of this, and I will be sending this by end of day. We will make sure and facilitate that someone is in touch with you to make sure that you can update your charity report. If you are wanting to participate for the very first time, feel free again to just email me and we'll work together on that. The Charities Bureau website is listed right here. For FASB, there's significant new guidance related to changes in financial reporting for nonprofits to always be in chargebacked. Your New York State nonprofit regulations and legal updates. that would be the resources here. I'm getting a question right now, which would be, in an organization, who would normally lead the charge on this process? Finance, fundraising, your executive director? So my answer to that question is that it really depends on your organization. We work with people who are typically in development, some people in operations, some people finance, some people even your executive director. It depends totally on the infrastructure of your organization. So for example, if you want to get into the portal, definitely feel free to just reach out to me and let me know the email of the person who's going to be logging in. Once you're logged in, you're going to see the different tabs in the portal of what we're asking. So for example, your budget, when we talk about standard 14, you would actually just submit a PDF or even your totals into the portal. And if you yourself, the person who doesn't know what the budget is, you could just ask your financial person, maybe your controller or your CFO, for that budget, and then you can facilitate it that way. So if you have any questions about who has access to the portal, I'm happy to answer it. But my answer to this question is it really just depends on your organization. But I do hope that that helps. So we are looking at an accredited charity who's eligible to become a Bbb Charity Seal holder. So if you do meet all 20 standards, you are automatically, again, considered an accredited charity. So if someone goes to our website and they look up your name, you'll see those green check marks that say that you meet all 20 standards, you're an accredited charity. But if you would like to use our seal as a fundraising tool, that does come with a cost on the sliding scale. So a Bbb Steel Display, this is what one would look like if you would like to put it up on your website, and it should lead directly to your report, which again shows that you meet all 20 standards. So I'm going to look at some of these questions, so feel free to keep asking them. And I did want to clarify that as you do look at that portal and as you do upload that information, we do ask that someone senior does approve of that submission. So you're at the end, you're going to get an approval form that signs off. We're going to ask for a second person to sign off on that submission who sees it as well. So this would typically be an executive director or a chief operating officer, for example. What is the Bbb view on CEO being a member of the board? Also, how about the CEO's spouse? That's a very good question. So there are many CEOs who do sit on the board. These typically are non-voting members of the board. The structure is going to be different for every organization, so I can't give one sweeping answer, but it really does depend on, one, the compensation, two, if that person is a voting member. As it pertains to a spouse, it's a little bit more difficult to say. So if you have any questions that might be more specific about your organization's structure, I would be happy to answer that via email. My email is right here. And I'm also going to be sending this after this has completed. So you'll have my email from that. If you have any more questions, I'm just looking at them now. All right, so I guess with that, I'm not seeing any more questions. I'll stay on for maybe a few more minutes, and I would be happy to answer any questions that you have. All right, well, I want to thank you all so much for joining me and my colleague Chris. We really appreciate your attendance, for your thoughtful questions. And if you have any specific questions, again, I know I've said it a million times, but I do want to make myself available as much as possible. So I'm happy to answer any questions, but again, enjoy the rest of your day. If you're living in New York City, it is cloudless, so go for a walk and enjoy yourself. Take care, everyone.